Oh my goodness, it's not a joke. The crypto market just made one of the craziest moves we've seen in months on Monday morning. You might have missed it if you closed your eyes. More than $1 billion worth of crypto bets were closed out in less than an hour. Gone. That's it. Long players lost a lot of money, leveraged accounts were wiped out, and all the charts turned red. There are other people like you who woke up to find their portfolios gone. XRP, Bitcoin, and Ethereum, things were all over after this. At the same time, big names like Coinbase's CEO telling us what the next step will be for regulation, Elon Musk and Donald Trump making an appearance together, and Binance's CZ resurfacing and causing rumors. The crypto market is going through a perfect storm right now. I'm going to break it all down for you so you know what happened and where the chances may be. This is not advice about money. Just before we talk about the billion-dollar loss and how it's affecting XRP, I need to tell you something important. I've put together something special for you if you really want to make a lot of money in this market. The name of it is the XRP Millionaire Blueprint, and it comes with a detailed guide, an infographic, a video description, and more. This is meant to help you understand and feel safe while the rest of the market goes crazy. It's linked in the comment below this movie that is currently being pinned. Take it now because chances like this don't last long. Let's get back to the main event. This is what happened. A bunch of people sold their crypto in just a few minutes, around 9 a.m. Eastern Time. In just one day, more than 47,000 traders were forced to leave their accounts. In the last 24 hours, the total amount of money lost rose above $1.7 billion. Traders in Ethereum lost about $283 million. People who owned Bitcoin lost over $200 million, and people who owned XRP also lost money. About $55 million worth of XRP positions were lost almost quickly. This is the kind of move that makes the market go crazy. It wasn't because of bad news or a hack. It was just that there were too many people in places of power, and one falling domino set off the whole chain. You know, this is how things usually go if you've been following crypto for a while. Traders use 25x, 50x, and even 100x longs because they are greedy and think they can't lose. Then there's one big move down, which could be caused by a whale, an exchange, or just the way the market works. This breaks those over-leveraged positions like glass, and all of a sudden there are cascading liquidations where every margin call makes more people sell, which is what we just saw. Let's look at Bitcoin. It fell quickly from about $114,000 to test support near $112,000. During the same time frame, Ethereum fell by about 5%. The price of XRP, which had been around 0.288, crashed right along with the giants. The numbers turned red everywhere. Some altcoins go up or down 20% in a single day. That's more than just risk. When that happens, the game starts over from scratch. But now for the important part. There was nothing big in the news that made this happen. There was no big news about an SEC case, an exchange going bankrupt, or the Fed. This was a pure case of technical bankruptcy. When that happens, the chances to get back on track often come faster than people think, because the most important things stayed the same. XRP didn't lose all its value all of a sudden. Bitcoin was still gold in the digital world. Ethereum didn't lose all of its DeFi community all at once. Traders took on too much risk, and the market punished them. Let's talk about the time, since this wasn't a coincidence. In the crypto world, Mondays have a bad name. Weekly candles end on Sunday night, futures and options start over, and there may not be as much trading going on as there is in the middle of the week. This week also happens to be Rosh Hashanah, the Jewish New Year. Historically, big players on Wall Street traded less during this time, so you have the perfect recipe for strange, thin, and easy-to-manipulate market changes. Seasonal patterns from the past can still show up in the internet trading world of today. Another interesting fact, the so-called altcoin season measure went up for a short time to 100 and then fell back to 67, even though Bitcoin's dominance didn't change much. Traders get scared when things go wrong like that. These signs are used by algorithms to trade, and when they notice something strange, they can add to moves that are already weak. Because of the time, the leverage, and the strange behavior of the algorithm, everything was set up for what we saw this morning. In the meantime, CZ from Binance has actually come back into the chat. He has been talking about specific projects and even hints that the biggest bull market ever might still be ahead after taking a break for a while. Analysts then pointed out that most of the trades that were closed today were on Binance right after the wipeout. Longs of 100x Bitcoin, 50x Solana and XRP, and 25x Ethereum and other cryptocurrencies. Almost nothing flushed on BNB itself. Random event? Perhaps. But it's hard to miss the fact that the world's largest market is always in the middle of these waves of liquidation. So Binance was directly to blame, not all the time. But when you put that much power on their platform, it only takes one quick move to set off the chain reaction we just saw. Whether it was a whale dumping or an algorithm going wrong, Binance was the place where it all happened. The best part is now here. At the same time that all of this chaos was going on, Coinbase CEO Brian Armstrong was putting out some very good news. His main goal is to get the Clarity Act passed, which will be the next major crypto law in the US after the Genius Act. For stablecoins, the Genius Act paved the way and made the law clear. The goal of the Clarity Act is to do the same thing for all non-stablecoin assets, such as Bitcoin, Ethereum, and yes, XRP. The government isn't just making noise here. This is the big moment for crypto in the US. Both parties in Congress are on board, and the Senate is moving quickly to pass legislation. Armstrong is sure that this will soon become law, more so than ever before. That's important because big investors like hedge funds, pension funds, and large investors don't put money into markets that aren't clear. They need rules. They need to be sure. They want to know exactly how to do things. As soon as that framework is set in stone, everything starts to flow. That's the kind of thing that XRP needs to go from being a speculative asset to a tool that most people use. Plus, the time couldn't be better, since we already have applications for XRP spot ETFs ready to go. Clear legal issues and access to ETFs are two things that will cause huge amounts of money to come into XRP. I know that many people feel scared when they see days like today. When they see $1 billion in sales, they think the bull market is over, but history says something else. In these flush-outs, markets start over. Weak traders are thrown out, traders with too much debt are punished, and solid investors keeping strong assets like XRP get ready for the next leg up. These kinds of dips don't mean the end. Most of the time, they set the stage for the next big rise. That's where we are now. You just saw how quickly greed can fall apart on the market. Now the question is, are you ready to set yourself up before you feel confident again? That billion-dollar sale sounds crazy, but it's only the beginning of what looks like it will be a very important week for crypto and XRP. Aside from the flash crash and Binance's shade, what's really going on in policy, the economy as a whole, and even in pop culture, where people like Elon Musk and Donald Trump are showing up together again, is the bigger picture. All of these things are sending out waves that all join together to form one stream. XRP is in the middle of it all. First, let's look at what Brian Armstrong said about the Clarity Act. These laws are different from the ones we've had before. It has been years since there were clear rules about how to regulate the crypto area. Law enforcement groups like the SEC would file lawsuits, drag projects into court, and say they had control over tokens in the past. One great example is XRP, which was in a fight that went on for years and scared investors, even though the technology behind it kept getting better. The Clarity Act wants to get rid of that doubt for good. The thought is easy to understand but strong. Make it clear to exchanges, issuers, and buyers what kinds of assets are protected by securities law and what kinds are protected by commodity law. With the Genius Act, this was already done to stablecoins. It's time for the rest of the crypto market to be just as predictable. Armstrong made sure to say that this isn't just wishful thought. Two parties agreed on the bill in the House, which is not often seen. What's more, the Senate seems determined to see it through. He even said, "This freight train has left the station," which makes it sound like the train can't be stopped. Think about how that understanding will affect other things. Once the law is passed, institutions will be able to hold Bitcoin, Ethereum, XRP, and other cryptocurrencies without worrying about being caught by regulators. Exchanges can be sure that goods like derivatives and staking are legal when they offer them. And new players, both individual and institutional, feel more confident when they know how the game is played. That's why truth is called the holy grail of crypto so often. It does not matter how strict or lax the rules are as long as they are clear, written down, and stick to. It is known that doubt is bad for business. And one of the biggest uncertainties this industry has ever faced is about to be taken away. Put that on top of the story about XRP. Ripple's technology is already being used in tests for global payments, money transfers, and banks. Big banks like Santander, Bank of America, and SBI Holdings have looked into or tried RippleNet's cross-border solutions. That one thing? There is some doubt about whether XRP can be used properly in the US. With the chance of an ETF, that's like rocket fuel for Ripple. Once that's done, it doesn't just get regulatory green light, it gets legitimacy. When we talk about ETFs, let's not forget how important time is. There are talks about spot XRP ETFs, and they're coming at a time when the market needs new money coming in badly. When Bitcoin ETFs first came out, they brought in billions of dollars. Then Ethereum ETFs came out and brought in even more money. It would be historic if the SEC allowed an XRP ETF. Not only would it allow regular investors to buy XRP, but it would also be the first digital asset in the US, other than Bitcoin and Ethereum, to be approved as an ETF. That's an impressive feat. With ETFs, brokers, retirement funds, and wealth managers can buy XRP without having to deal with crypto wallets, exchanges, or secret keys. A lot of people can just plug and play, and that's how trillions of dollars from traditional markets can start moving into digital assets. Now let's look at the big picture of this week's economic events, since the Fed is a big deal. The head of the Fed, Jerome Powell, is going to talk on Tuesday. New home sales data comes out on Wednesday, durable goods orders, and the GDP report come out on Thursday, and the Fed's favorite inflation measure, PCE inflation, comes out on Friday to end the week. What does this have to do with crypto? Because economic data manages the flow of money. If the economy starts to slow down, markets may start to price in rate cuts in the future. This makes risky assets like Bitcoin and XRP more appealing. If prices go up more than expected, traders get ready for stricter rules, which can hurt all markets. Crypto stays alive in a world of its own. Every Fed decision, every inflation report, and every GDP update changes how people feel and how much money they have available. And now for the interesting part, before all of this information comes out, there was the closure event we just saw. It kind of leveled the playing field. Leverage was flushed, weak hands were shaken, and the market can now respond to the news of the week without having to worry about dangerous overhangs. That's how timing works sometimes. It clears the decks so the real moves can begin on better ground. Now let's talk about Trump and Musk. These two aren't just famous people, they're culture hubs. It makes the news when they fight. When they get along again, it means that powerful forces are in agreement. They were recently seen together at an event put on by Charlie Kirk, and the meaning wasn't missed. Don't forget that Trump has changed his mind and is now backing crypto. He has made it clear that he wants the U.S. to be the Bitcoin capital of the world. There's more to that than just political talk. It tells regulators, organizations, and future laws what they should do. What about Elon Musk? He's always been a crypto wildcard because one tweet can change the whole market. Musk knows how to use his power, whether he's promoting Dogecoin, teasing about Bitcoin working with Tesla, or attacking centralized exchanges. The fact that they are on the same page sends a strong but indirect message. It means that government leaders and cultural loudspeakers are on the same page and want to encourage people to use crypto. It doesn't directly make XRP go up tomorrow, but it adds to the overall mood of acceptance and progress. Crypto is no longer being pushed to the edges. It's getting more attention, and leaders should be linked to it instead of staying away from it. Let's get back to the technical side of things and talk about what happened with liquidations. Traders often wonder why the market crashes so hard when it goes down, but rarely goes up as quickly. The answer is in the study of mind. Leverage slowly grows as prices go up. Traders keep adding to their positions because they believe they are safe. But when prices go down, bankruptcy levels are quickly reached, which forces people to sell faster than they can buy. It's how leveraged markets work. Fear is more urgent and sharp than greed. That's why drops like these are so painful, but they can also be signs of a turning point. As soon as there is no more debt, the prices of goods trade closer to what they are really worth. The comeback can be just as quick if buyers still believe in the basics, which a lot of them do with XRP since ETFs are on the way. Also, it's important to note that not all of the coins were hit evenly. It was a crazy day, but BNB, Binance's own token, barely saw any flush. That makes me suspicious because it means that BNB may have been saved while other tokens were destroyed. Perception is important, not whether that's true or not. Traders can tell when one exchange's local token is safe and another isn't, and those stories stick around. On the other hand, data from on-chain experts shows that whales, who hold the most coins, did not sell in a panic during the crash. Some even increased their stocks when prices were lower, buying up assets that were on sale, while small traders lost everything. This kind of action is common. While fear rules the news, institutions and whales use volatility to build up their stocks. Now the question is, where does this leave XRP? At an interesting fork in the road. On the one hand, it had just been through a painful flush that shook out dealers who had too much debt. On the other hand, it's looking at things that could start a major event. ETF approval, clear laws, and political benefits. You can see that the market is getting ready for a big move because whales are still buying extra shares. Also, don't forget about the seasons here. September has been a rough month for both crypto and stock markets, but in the past, October has been a time for returns. September and October were both red last year, but November shot up a lot. It's called October for a reason. A drop in prices now might be setting the stage for a rise in October just in time for clarity and a lot of ETF news. Now, let's take a quick look at links. The crypto market is still led by Bitcoin, but XRP has been showing signs of becoming less tied to Bitcoin. XRP rose sharply without Bitcoin during some news events, such as Ripple's partial win against the SEC. We might have another splitting moment if ETFs or clear rules about regulations related to XRP come out. And when an asset breaks free of the market tide and sets its own course, that's when it makes huge gains. And this is the most important thing to remember. The billion-dollar bankruptcy I just saw is not a sign of failure. It's a sign of a fresh start that might make it easier for the things that are happening right now to become possible. It's possible that the second day of trade for the XRP ETF was even more telling than the first. The markets were moving toward a more data-driven reality after the opening bell excitement had already been priced in. Analysts were no longer just looking at signs. They looked at volume, liquidity, and institutional order flow to see if XRP's ETF could keep up its pace or fall by the wayside like many other hyped launches before it. The pattern of arrivals was the first thing that stood out. The XRP ETF had a surprisingly steady pace, unlike some spot ETFs that see a lot of retail involvement right at the start before it slows down. The balanced order book suggested that a lot of the activity wasn't just random shoppers going crazy, but rather planned allocation tactics. I thought that one piece of information was very important because it suggested that institutions were involved. There are some things that don't chase candles: family offices, pension funds, and automatic rebalancing systems. They are strict about allocating, and they stay. The exchange effect was another important point to remember. As soon as XRP ETF units started trading, arbitrageurs jumped in to make sure that the price of the ETF matched the price of XRP on controlled exchanges' spot market. Because of this, the premium price window shrunk almost right away. That's more important than most people think. There is a positive feedback loop when the gap is small because it makes professional traders more likely to use the ETF as a liquidity tool. Now, skeptics brought up a reality check. Strong money came in on the first day, but not nearly as much as when Bitcoin's ETF set a record earlier this year. But it's not fair or accurate to compare XRP to Bitcoin in this case. Bitcoin had been pushed by institutions, regulated, and covered by the media for more than 10 years. XRP, on the other hand, came out of years of court cases and doubt to become legitimate almost overnight. The early numbers for XRP's ETF launch were even more impressive because they came after an even tougher fight. Another interesting story was about liquidity depth. Traders were shocked at how quickly the bid-ask stacks on the ETF filled up. A lot of the time, wealth on screen shows how confident people are. Institutions don't trust performance when there aren't many orders. It shows faith that supply and demand will balance without wild swings when it's thick and layered. By day 2, the ETF order book for XRP was full, which shows that people were already used to treating it like a real financial object. Then, there was the effect that spread across exchanges, no pun meant. A few hours after the ETF went live, centralized trading sites saw a huge increase in XRP volume. Small investors who might not be able to buy ETFs in their home countries went to spot markets instead. This kind of power play is common. The impact effects on Bitcoin and Ethereum were similar, but this proved that ETFs don't take away liquidity, instead they add to it. Some people were not sure how standard finance would handle XRP exposure now that it had a regulated vehicle. Portfolio managers who had previously said that crypto investments were too hard to understand had no reason to do so anymore. Most risk groups are happy with an exchange-listed ETF that follows the rules. As those investors got more involved with XRP, the rest of the financial world began to realize that this asset was no longer a fringe token. It was a legal tool with a system for trading and reporting. The second statement from institutions was very helpful. One analyst at a big investment bank said that XRP's level of liquidity was much higher than expected. Another hedge fund manager said that it was similar to early-stage commodity ETFs that grew into trillion-dollar markets. Even people who weren't sure about the ETF start agreed that it went better than expected. That change in tone, no matter how small, is exactly how feelings go from being curious to being convinced. Derivatives were another important plot point. As institutions looked for ways to protect their ETF investments, the volume of futures contracts tied to XRP started to rise sharply. This is a lot like what happened with gold ETFs in the early 2000s. When a spot vehicle is created, the swaps market grows around it, making a network of liquidity layers. For XRP, this meant that traders could now make complex plans using ETFs, spot, and futures. This is a big step forward that makes XRP part of the financial markets. The most important information was missed, though: how people shop. After years of bureaucratic purgatory, a lot of people in the community had lost hope. XRP was always the future, but it never came true. In an instant, the ETF changed that story. Out of the blue, people's feelings changed from defensive optimism to aggressive pride. People in the community weren't wondering if XRP would last. They were wondering how big it could get. That psychological turning point is very important. As much as facts move markets, stories do too. And the story of XRP had been changed. Of course, there are still problems. There is still a lot of regulatory confusion in many places around the world. Some banks are still not sure what to do and would rather wait until liquidity improves even more. And critics say that the amount of XRP in circulation still makes them wonder about how long its value will last. The ETF start doesn't get rid of these worries, though. It just changes the way they're seen. They are no longer existential dangers. Instead, they are obstacles in the way of an asset that is already part of mainstream finance. In fact, some experts are already changing how they think the price of XRP will go. Forecasts used to be based a lot on adoption curves for international payments and agreements between institutions. They are now adding ETF flows as a main input. That changes the value equation in a big way. XRP's potential upside may need to be recalculated completely because of flows from retirement accounts, sovereign funds, and passive indexes that are much bigger than standard adoption models. By the third day, something very strange was taking place. No longer were people arguing about whether the XRP ETF was a success. People were arguing about where it stood in terms of the most important ETF releases ever. That kind of mental leap can only happen when motion is clear. This is where the long game becomes very clear. ETFs don't move. When it comes to ETF allocations, unlike risky spot trading, they often stay in portfolios for years or even decades. That means that every new money coming in isn't just short-term demand. It's demand that's built in and locked away in retirement accounts and wealth management tools. Every week that steady capital comes in makes the base for XRP's price stronger. Without a doubt, we are seeing a major change happen right now. There's no longer any doubt about the legitimacy of XRP. It has come out of the depths of speculation. One thing is clear, you either think the market will go up, down, or stay the same. The story will never be the same again. It was more than just a new trade product when the XRP ETF came out. It was also the start of a new era in the history of finance. You can find a link to the XRP Millionaire Blueprint in the pinned comment right now. It will teach you how to position yourself in this new era and how to navigate the flows, cycles, and hidden mechanics behind what could be the most transformative investment opportunity of our lifetime.